Japanese candlesticks, which is a lot of what we'll be reading and studying when we talk about technical analysis, can now be used for almost all kinds of markets today. The fact that human beings are the players in the money markets or in trading, it means we really cannot write off, or we can't do away with these three things, which are fear, greed, and hope. We become emotionally invested when it comes to money, sometimes beyond normal, just because we understand that money is involved. We come to talk of what we refer to as market psychology. So there is a psychology behind every market. They play a huge role in the market's direction. They play a huge role in price actions. They play a huge role in the decision that people make when they decide to buy or sell. Using candlesticks pattern to draw and predict market directions based on buyers and sellers activity. And this is basically what I usually refer to as technical analysis. It is to use Japanese candlesticks to draw certain patterns, to analyze patterns, to recognize patterns, and to use a combination of these things to understand the market, to predict movement of the market, and also to be able to know what emotion is currently at play in the general picture of things. Practically, you can see that when Bitcoin price goes down, when it falls like that, it pulls down the entire altcoins. Okay, so, and you can see the reactions of people at the time. You'll be able to see fear in the eyes of people, where people become afraid because now they are scared if their investment is gonna go to zero. All right, but at the point where Bitcoin got to 60K last year, people began to get really hopeful. People began to call unimaginable prices. You know, people were saying that Bitcoin was going to go to 200K by December 2021. You know, this is hope at play. And again, that was greed alongside. Emotions came into play. People ignored the fact that if there was a previous high and the price of commodities going back to that previous high, it needs to go back down again before it goes back and retest that high 2 to 3 times. But you know, the fact that the price of Bitcoin was high, there was news all over the place. Some people were buying Bitcoin at the time at 60,000, at 55,000, at 50,000, because they heard that Bitcoin was going to go to 200K by December 2021. So if you look at it quite frankly, you'll be able to see that these three things, they come to play every time in the market. They are always there. It has affected you and I at one time or another. You cannot deny it. You can think back very well. You will also realize that you've been there many times. Even today, I know that a lot of people are holding on to some of these shit coins because people were hoping that maybe SafeMoon, for example, was going to go to 0.01 cents. You know, the people were hopeful that it was going to cancel 5 zeros, cancel 10 zeros, you know, and that kind of thing. You know, so today, even with the price that it is, we have people who are stuck in there and they cannot sell because at one point in time, they were greedy, even though they were in profit, but they were greedy because they were waiting for it to cancel 450. So that's really the whole thing about market psychology. Recognizing these things will help you to cultivate a culture of discipline such that you set down the rules, you lay down your rules as a trader, and you stick by those rules. Okay? And that is what brings us to risk management and strategy. So we mentioned that trading cryptocurrency is risky. It is important that you know what you're doing before you go into it, and it is important that you do it with caution. Okay, so what that means is that there is risk involved. And when there is risk involved in a thing, it is required that you learn to manage your risk. Frankly, risk management is basically the system or the practice of ensuring that your capital remains safe and that the market does not hit you up. So risk management, number one, don't listen to Sheilas on YouTube. They are also on Twitter as well. So you need to be careful of things that you allow to interfere with your mind that might influence your decision. Let me put it like that. Number two, research is your friend. Research as much as you can. I see a lot of people in crypto today who usually just wait to be fed. Who usually just wait to be fed information. They wait to be fed what is the new gem. I usually encourage people to, the internet is there. The Google is there. I mean, that's the starting point. You need to be able to do research. You need to be able to read. You need to be able to patiently read information, patiently take data, read white papers of tokens that you want to put your money into, go to their sites, read about them, read about their plans, see if they have a future or not, see if they have plans, see who are the team, the team behind that token, see who they are, okay? Check out for their track record and things like that. These are all things that people do or you should do as part of fundamental analysis, of course. So let's move on. Number three, don't invest or trade any money you are not willing to lose. Be sure about what you are putting in there into your trade. It's something that will not give you a heart attack. I think that's a better way to put it. If something eventually happens, okay? So then lastly, always make a plan and stick to that plan. Who fails to plan does what? Plans to fail. So it is important that before you set out to do anything, you need to plan first. All right. Failure to plan leads to disaster. All right. All right. So we'll move on to strategy. Okay. So you need to have your strategy and you need to stick to it. Every trader must have a strategy. Eventually, the more you get conversant with technical analysis and charting and patterns and trend and market trend and everything, you will eventually invent your own strategy, the one that will personally work for you. For a start, this is something that I can say it's a general starting point. And that is number one, you should not commit 100% of your money in any trade. Start with 50% of that money first. All right. And if price starts to go against your expectations, then you will still have a remaining 50%, out of which you can take another 50% and do dollar cost averaging. All right. Number two, don't buy or trade any coin that is already pumped. Guys, FOMO is real. All right. It is real, and FOMO can happen to anyone. It can happen to newbies, it can happen to experts, and it can happen to intermediate traders. FOMO is a respecter of no man. Okay, FOMO can happen to anyone. The FOMO happens when you see a coin pumping and you want to jump right in because you don't want to miss out. You also want to be part of the people who smile to the bank. All right, just because you see the price of that token rising up. You also want to make money, okay? So, but it is dangerous for anyone to jump into any coin that is already pumping. Number three, don't use more than 10x leverage on any trade. So this is in terms of leverage trading. Okay, so I usually advise people not to use more than 10x unless you know what you're doing. There are traders who use 20x, who use 50x and 100x. And when it gets to that point, for me, it is pure gambling, okay? Because anything can happen. I have friends in the US and Europe who does this, and they practically tell me that, yes, that they know that what they are doing is gambling, all right? Lastly, don't forget to use stop loss. Stop loss is very, very important in the life of any trader. So you as a trader, as you are starting out in this journey, please, you need to put this right at the center of your heart. Stop loss. Don't ever forget it. It will save your life a million times. It has saved so many lives. It has saved so many fortunes. It has saved so many people. The ones who are disciplined enough to use it, it has saved them from committing suicide. Um, just by just for the fact that market begins to begins to change direction, or market begins to crash. Here is the candlesticks, what the Japanese candlesticks looks like. We have them in red and green. Japanese candlesticks are formed using the open, high, low, and close of the chosen time frame. So what you're looking at is a Japanese candlestick. It is what forms the charts that we're talking about. It is what we are going to be reading and drawing and plotting when it comes to technical analysis. It all starts with Japanese candlesticks. And understanding it, it's a core of you being a trader. So a Japanese candlesticks has a body, it has a upper wick, and it has a lower wick. So a Japanese candlestick consists of maybe three parts: the upper wick or the upper shadow, the body, which sometimes is referred to as the real body, and the lower wick of the lower shadow. You can say wick, you can say shadow, they mean the same thing. You can say candle body, you can say real body, they mean the same thing. All right. So the topmost part of the candlestick forms the high, and the lowest part of the candle forms what we call the low. This is how the Japanese candlestick looks like a lot of times. Sometimes you might see some other kinds of shapes and sizes, okay? But however, one point to note here is that a green candle and a red candle are both called Japanese candlesticks. Point number one. Point number two, a green candle is called a bullish candle, and a red candle is called a bearish candle. That's point number two. Point number three. Point number four, upper shadow is the high of that candle, and the lowest point of the candle, okay, is the low. It's called the low of the candle. That's point number four. Point number five is that from the point where the body of the candle starts up here, you can have both closed and you can have both open. So it is the body of the candle is either open at the top or close at the top, or close at the down or open at the down. That depends on whether the candle is green or it is red. I mentioned that the green candle is called the bullish candle, the red candle is called the bearish candle. So let me relate that to this open and close that I'm talking about. When you have a green candle, the price change in that candle usually open from the bottom here and closes at the top here. All right. When you have a red candle, the price action for that candle will open at the top here and close at the bottom. The candle has three parts: upper shadow, real body, lower shadow. The real body consists of open and close. Candle are of two types, bearish candle and bullish candle. The bullish candle is the green candle, the bearish candle is the red candle. For the bullish candle, the price opens at the lower end here and closes at the upper end. For the bearish candle, price opens at the top and closes below the open price. Does that make sense? I'm going to switch over to our live chart just so we can see the real candles in their real colors. All right, so here we have the, let me expand this and let me take this backwards. All right, so this is Japanese candlesticks in live picture. You can see the colors. You have the green candles and you have the red candles. And these are just the two major colors really. Okay, and the red candles are the bearish candles and the green candles are the bullish candle. The bullish candle are forms when the price is going up. The red candles, which are the bearish candles, are forms when there is fall in price. All right. So when I said the price for the bullish candle is formed, or the bullish candle is formed when the price is going up. So that means that price will open at the lower end and closes at the upper end. And that gives you a green candle. When price opens at the top and closes below it, that gives you a red candle. All right, I'm just going to pause here and let's have a discussion. I want to be sure that I'm not confusing anyone at this point. All right, so guys, if you want to speak, you can speak. And let me know that you understand what I've said so far and you're not confused in any way. Okay?
I want to ask a question. No.
Go ahead, please.
Okay. When a candle starts, like let's say it's bearish, say we have two type. The one if it start with that red, how will someone predict that sometimes you can just start with a red now. Okay, or let me ask this, like when it start, let's say it starts with that red now, like how many minutes will it take for that one to complete before it will now start another, it will pick another candlestick? I don't know if you get the
Right.
conscious, sir.
Yes, I get the question. Okay, fine. Do we have someone else? I'll take that. Any other question again? If you want to speak, please, you can unmute and speak.
Mayor, I'm just coming online. I was a bit busy. I haven't forgotten that we have this lesson, so I don't even know where to start asking my question from. But just like what this cadre of a guy just said, this candle or a green candle and red candle. The question he asked, how do we know how far the green candle can go before coming back to red candle? You understand my point now? You understand my question?
Yes.
Like now, if you view 5 minutes chart, maybe it is on green candle, like it's about to a bit bullish, but it just go up a bit and now drop. How do we know that scenario in that aspect? Like if you are monitoring a trade.
All right. Do we have anyone else who wants to speak?
Good evening, everyone.
Yeah, good evening.
Yes, you
Please go.
said we should plan. When you were talking about the market psychology and all that, you said we should plan. Plan as in what terms? Like plan how? Is it how you use the money or
Okay, no problem. Who else? I've taken that down. Who else?
All right. Good evening.
Yeah, good evening. Please go ahead.
Hello.
Yes, I can hear you. Go ahead, please.
Okay. Yeah. My own question. Actually, I want to say thank you for taking your time to teach us all these things this night. I really appreciate. So my own question is that one of those things that I know when there is a bearish market, it's like maybe people are selling or maybe they are panic selling. You understand? But at some point, I always look at the fact that whenever Bitcoin is dropping in price, then it carries almost all the crypto along with it. Even if people are not selling that particular crypto, the price will still drop. So I don't know. Is it because Bitcoin is the, like, it serves as a overhead of all the crypto? That's why the price action of the rest of the coin always follow the pattern. Because even, okay, let's say people are selling Bitcoin, but maybe people are not selling another coin, but the price will still be dropping. So I don't know what actually always cause that. Is there any other thing that always cause dropping in price apart from people selling? So that's my own question. Thank you.
Okay, thank you. Any other person? Any other question? Any other comments? Or okay, so let me just start with the ones that I have so far, and if anyone else has something else, then I think they will speak again. Or what you're looking at is the tradingview.com platform, all right, which I told you about before. And the TradingView site is where everyone does the analysis. Well, there are other platforms that are coming up recently like them, but so far they've really not been able to get to the height of where TradingView is, and because a lot of people have gotten used to TradingView. So that aside, now going to the question of Kadri and Mayor, both questions are quite alike. And how I want to answer that question is, I know I mentioned it the last time. I mentioned time frame. There is what we call time frames when it comes to trading. I also remember saying that the type of trader that you are or that you want to be will determine what kind of time frame that you'll be working with. I also mentioned that for day traders, by standard, they work with 1 hour time frame and smaller time frame. So this is all time frame. So the question now says that, okay, when do you know when a candle, the feature of a candle, basically, whether it's going to be red in the end or it's going to be green in the end? First, when you look here, these are all the applicable time frames. No, not all, but these are several of the applicable time frame for trade analysis. You have them from minutes. As a matter of fact, even seconds. You have seconds, you can see, and you have minutes, and you have hours, and you have days, and there are more really. I can even add other time frames that are not here if I want. Okay, so these time frames are what you as a trader will work with in order for you to be able to plan your trade before you execute it. And also, your type of trader that you want to be, you must stick to certain kinds of time frames because that is what is well suited to the type of trader that you are. All right. Now, I haven't talked about time frame. I can choose any of the time frame that I want. Depends on the type of trader that I am. Maybe I'm a day trader. As a day trader, by standard, that's by general standard. Take a 15 minutes, 5 minutes. You can work with 30 minutes. You can work with 45 minutes. All right. Now, after you have selected your time frame here, point number one, every candle that you see here, each of these candles that you see here represents 45 minutes apiece. Does that make sense? Each candle you see here right now, the time that it took to print each of these candles here is 45 minutes for each one of them. That is one thing you should know first. Any time frame you are on, any time frame you choose, you should know that when you are on that time frame, each candle you see represents a trading session of that time frame. So now that I am on 30 minutes time frame, it means each candle here represents 30 minutes of trade. 30 minutes of trade. 30 minutes, 30 minutes, 30 minutes, 30 minutes, 30 minutes. It doesn't matter whether it's a long candle or a short candle or a tiny candle like cross, like the Catholic cross, yeah? It doesn't matter. Each one of them is 30 minutes each. Because right now I'm on 30 minutes time frame. If I change and come to 1 hour, each of these candles here represents 1 hour, represents an hour, an hour. It doesn't matter whether it's the long one or the short one. Each one of them represents an hour of trade. Is that clear? The next point in answering the question is, can you see my right hand side here, guys? Can you see here? Let me use this.
Yes.
Can you see where that arrow is right there?
Yes, we can see it.
Okay, great.
That's the price of the coin.
All right, great. But there is a second information there underneath the price. Can you see it?
The seconds reading under it.
Beautiful. So what you have there is both minutes and seconds. It's a countdown timing, or it's a timer countdown for each of the candles on the time frame you are on. So aside the price, there is also the time of the counter, the timer counts down for each of the candles. Depends on the time frame you are working with. So right now, as you can see, this is the minutes and this is the seconds. So we have about 13 minutes for this candle to close. 13, now we have a little over 12 minutes now for this candle to close on this hourly time frame. And that is what it is. And so this is where you will know when a candle, how much time it remains for a candle to close. All right. And knowing how much time it remains for a candle to close means that anything can still happen. And you will never know what happens until the candle this time is finally exhausted, or this time runs out or completes, and then you can see the final shape of the candle. Okay, does that make sense?
Makes real sense.
Beautiful.
Sorry, I'm a bit confused. Sorry. For that time frame of 18, is it that when you select the time frame of 1 hour, the seconds under the price of the coin will start from 1 hour and be counting down, or how? I don't understand.
Yes, you just answered the question yourself right there. That's it. So when I select 2 hours, each candle here represents 2 hours, and the timing for any candle that starts, either it is just starting or is already in play. Like you can see now, this candle is already in play, right? The candle is not just starting now. So the time has been counting down right from 2 hours. For 1 hour, if I move to 1 hour time frame, this candle has already been running before we got here, right? And I can tell you for sure that the timing started from an hour and is counting down. Right now, it's at 10 minutes. The same thing goes for any other time frame. Let me just so you can see it in action. Let me go to a smaller time frame that we can really stay on, we can see right in action. So I'm right now on 3 minutes time frame, and this candle is the one currently running, and you can watch the time on the side there. We have 1 minute to go, so it means that if we remain here for the next 1 minute thereabouts, this current candle will come to an end, and the new candle will start right away. And when the new candle starts, then you can pay attention to the new time once a new candle starts. So I'm just gonna stay here and let's watch, okay? All right, can you see that?
In my own observation, after the other time finishes, the candle turned red. For initially it was green. I don't know if that's what really happened there. I'm a
Yeah,
bit
go
confused.
on. Then what else?
It's another time start counting. That's what I
Two things
observed.
happened. Another candle
Start counting. Yes.
And it started right from 3 minutes. Because we are on 3 minutes time frame.
Yeah.
And that answers your question.
Now we are in a 5 minutes. Let's say we are in a 5 minutes time frame, and is on, let's say, on red candle. That is a bit bearish. You are getting my point? Hello.
Yes, go on.
Okay. Now it's on red candle. Now the 5 minutes elapse. Okay, as the 5 minutes is elapsing, how do we identify, like I've asked this question, how do we identify the next candle that is coming with it? Like if I want to enter trade after that countdown finishes, I want to enter trade, maybe how do I dictate that the next trade, the next movement will be bullish or bearish before I will short or long the trade, maybe on future trade?
So see, you cannot know the next candle that will come out, but you can know the shape of the candle that just finished. It is impossible for you to know the next type of candle that will come. We are ordinary humans. We are not superhuman. So we really cannot tell what has not come into existence. It is only God that can do that. So you will not be able to tell the next type of candle that will come, what that candle will end up with. But what you can tell is a candle that has already fully formed. Now, how do you tell that this candle is a signal for me to enter a market? So here it is. And it's because we haven't gotten there. So, and I think we will get there in the next class. But let me just say this point here right now. I hope you all can still hear me. Please, you need to hear this point. And the point I want to make is every candle has a name and a meaning behind it. Every candle has a name or a pattern and the meaning behind that candle or that pattern. So I was just mentioning some names earlier, and I know that that name might be strange to some of you. I mentioned pin bar or hammer. I mentioned harami. I mentioned dragonfly. I mentioned doji. These are names of candles. These are names of candle patterns that tell you when it is time to enter a market or when it is time to exit a market, because they all have certain meaning behind them. Remember, Muneiza Homer invented Japanese candlesticks in order to be able to predict the movements of people or the movement of the market ahead. That is kind of like the secret, really. The secret is that certain candles, they have patterns and meanings. And once you see those type of candles, by understanding what they mean already, it means you now can say that this is what the market is gonna do next. This is where the market is gonna go next. This is the direction, or this is whether the price is gonna fall now or the price is gonna start rising. That's about it. But I'm gonna keep that secret for now until the next class. Guys, this class, technical analysis, is very interesting. I really don't know what else to say, but it's beautiful. All right. But like I said, it's only God that can tell what has not come into existence. We as traders, we cannot tell what has not come into existence. And so I will not be able to tell what the next candle is going to be. The next candle that is yet to show up, I won't be able to tell what it is. But you see this correct candle that is running around right now, that is printing now. Once it is complete, and then I can look at it and say, okay, this is what this candle means. This candle's name is so. And this is the meaning behind this candle. And then I can use that meaning and say that this is the direction of the market. Or I can say that now the price is ready to start falling. Or I can say that now the price is ready to start going up. All right. So I'm going to move to the next question. I think that question was asked by Adaize. She said, I mentioned that planning. What do I mean by planning? When you fail to plan, you plan to fail. All right. So planning so far can mean, or let me just say, planning that I meant means a lot of the things that I have said. Number one, determine what kind of trader you want to be. Do you want to be a day trader, a swing trader, or an investor? Number two, after you have decided what type of trader you want to be, you should know the sacrifices that come with the kind of trader you want to be. For example, if you want to be a day trader, it comes with its own sacrifices, and such that you must be able to sit in front of your chart and monitor it and monitor your trade actively. All right. If you are a swing trader, you can afford to close your eyes and monitor your trade passively. If you're an investor, you don't really need charts. Just do your fundamental analysis, buy that token, au revoir or au revoir, come back the next 10 or 5 years, and then you can sell off your assets or your holdings and take your profits. That is one of the plans that I was referring to. The next thing you can do to plan is to do research. Do research on what token you want to put your money into. All right? It's your hard-earned money. You hold that responsibility to yourself to be sure you're putting it into a reasonable purchase. That's part of the plan. The next part of the plan is that you should have risk management skills. And I went through some of those risk management tools just on a general note. You can define and come up with your own risk management steps or strategies. All right. That's part of the plan. Then the other plan is, I mentioned strategy. You need to have a strategy. And I remember saying that you need to define your end game before you start at all. So that's also part of the plan. Have strategies. I also took us through some of these strategies on a general note. Again, when you become a pro trader, you're going to have the strategies that work for you, which suit your style. That's also part of the plan. And the final part of the plan is that when you make up your strategy, you should stick to it. You should be disciplined in sticking to your plans and your strategies when it comes to trading. And being disciplined means you don't allow emotions to rule your judgment. Just look at the charts and see what they are saying. And whatever they tell you, whatever the charts tell you, that is what you should stick to. Don't listen to what Twitter influencer says or YouTube shillers. Trust me, they have put so many people into trouble. All right, so those are all the plans really, and that's when you put all that together, that's what I refer to as you should plan. Yeah, I think that answers the question. And the other one, it's about how is it that Bitcoin pulls down the rest of the other coins, which we refer to as altcoins. Okay, good question. Okay, so let me just say that. I hope you guys are listening. Number one, in today's world, the world that we're in as human beings, and this world being broken down into continents and countries, all right? And we know that some civilizations started ahead of other civilizations. Some culture advanced ahead of other culture. Now, when you have that kind of situation, just like we have in the world today, for example, US, Germany, France, Russia, they advanced earlier and faster than maybe the rest of Africa, for example, in terms of technology, in terms of infrastructure, and some other key things, all right? In terms of even society, right? So in terms of even civilization, I think, okay? So what that means is that there will always be certain effects that we weigh on those behind them. So it's like saying that when something hits these people, when they cough or when they sneeze, when these very much advanced societies or countries, when they sneeze or when they cough, the rest of the other society behind them feel it. It's just a natural phenomena, okay? Just the way in a family, the father and the mother comes first. But when the father suddenly has a problem in the house, the rest of the family feels it. Whether you want to agree or not, it's just there naturally. The rest of the family will feel it. If the father is sick, the rest of the house will be sick. All right? Literally anyways, okay? So if the father is irresponsible, it reflects on the family. It reflects on the rest of the family. So this is the way it is. So Bitcoin has that edge over the rest of the altcoins. And that is why naturally, when Bitcoin sneezes or coughs, every other coins must feel it in the market. That's number one. Number two is this. There are altcoins that have trading pairs. So there's what we call trading pairs. And that is maybe like when you are trading Bitcoin against Shiba, or when you are trading BNB against XRP. This is called pair. Or when you are trading BTC against USDT. BTC is a token on its own. USDT is also a token on its own. So when you say BTC USDT, SLP USDT, BNB USDT, you also have BNB SRP, you have BNB BTC, you have BNB ETH. So these are all pairs. So you have BTC paired with many of these other altcoins. And so this pairing has an effect on the market. It naturally has an effect. The moment you pair Bitcoin against other altcoins to be tradable in the market, it means that when something happens to BTC, it must affect these other coins as well. For that reason that I just mentioned, that pairing reason, okay? it must happen. It is natural for it to happen. It is only if peradventure BTC was not paired against any other coins for trading in the market, that is when you also might not have that kind of effect. All right, that is number 2. Now, number 3, which for me now I'm just going to say is the last one. Well, there are other points as well, but for me, these are just the major ones from the trader's perspective. So what it means is that when people are invested in altcoins, let's say I put money in any of these altcoins, maybe BNB, okay? And BTC starts to go down. And because of these other 2 reasons that I have mentioned before, it is natural. I know that the price of my BNB that I am invested in will also go down. As a trader, what will I do? I will sell off. And once I sell, the same way, maybe 50 other people will sell too, or thousands other people will sell as well. And what happens? What happens in that scenario is that there will be more supply of that token now available. And we understand, if you understand the laws or the principle of demand and supply economics, you will know that when there is a huge supply of something in the market, the price falls. But when there is scarcity of a commodity in the market, the effect on price is that it rises. So when you sell, my neighbor sell, my friends sell, my other 150 colleagues to sell, what happens to the price of BNB? Price of BNB must fall. And remember, the reason why we were selling is that we know that for these other 2 conditions that I earlier mentioned, we know that it will affect BNB. So what do? I sell just to save myself a huge loss, just to reduce my exposure to the markets. All right. So for me, these are the 3 major things, or these are some of the many reasons why whenever Bitcoin falls, other altcoins, they take cover. Okay. I think I've answered all questions to a reasonable extent. All right.
Thank you very much for providing answers to all these questions. I just have one last question, please. What I actually want to ask is that, let's say I buy a particular coin at $0.5, and later I buy the coin started going up, and maybe it gets to $1, $2, $3. How will I know, like, there will be a kind of peak for that price, like the price will reach a particular peak before it starts dropping? So what will be some kind of something that I have to look out for in order for me to know when to sell? Because sometimes when you buy a coin, maybe at $0.5 and the coin rises to $1, you actually sell the coin, and the coin goes to maybe $3 or $4 after you have sold it. You will be feeling some kind of guilty and some kind of regret. You understand? So, what are those things that I might actually look out for in order for me to know at least, if not the peak price, but a price that is closer to the peak price for me to sell? So, that's my question. Thank you.
All right. Number 1, there is always regrets in the markets. It's not something that you can completely write off. Reason is because there are a lot of forces at play when it comes to market trading, and you alone, you cannot decide the entire reflection of the market. You alone cannot decide the behavior of the market. This regret is there for everyone, really. It happens to even pro traders. And that is what I usually tell people, that I tell a lot of my students that you need to know one thing, and when you know these things, you will have peace. And that thing is that you cannot take the entire money in the market, you cannot take the entire profit in the market, but what is expected is that you at all times ensure that your win is more than your loss. You at all times ensure that your capital is protected at all costs. So if you make 10% profit, it is profit. If you make 50% profit, it is profit. If you are lucky enough to be one of the few people who gets to hit the top of the profit, what you shouldn't do is to suffer loss. But any profit is profit, as long as it is profit and your capital is still there. And so knowing this, for me, I don't usually have any more regrets. Once I take a profit and the price of a token still continues to go, even though I've looked at my charts and I know that we are already at the top, any other thing that is happening is just extra. And I won't allow my greed to drive me into staying in there any longer. I have looked at the charts. Based on, and that takes me to your question that how do you know when to really? Now, that is what we'll be doing in the rest of this class. It comes with a whole lot of skills. First is doing the real charting, drawing the chart, knowing the indicators, being able to interpret candles and patterns, seeing patterns on the chart and recognizing them, seeing certain key candles on the chart and recognizing it, and knowing the meaning behind that candle. And then you combine this with other indicators and other skills available in technical analysis, then you can be